Hello everyone, I'm Rob Smith, the Mr. Black channel here at Ticker Talker, and if it's Monday, it's the Power Hour, 1 hour after the close. Every Monday we do this. It's recorded. If you go to the newsletter section under Power Hour, they're all there. So you got 30, 40 hours of listening if your listening pleasure, if you want to do that. Also, for newer folks, go to the newsletter section, make sure you subscribe to all of them. If you can't make it on a Monday, you can always email me the question, and I go through those first. It's better for me to do it that way than answer a million emails because that way everybody gets to hear it, and you get the charts and all that kind of stuff. So, that note, let's just get to it. All right. Hey, you're up. Okay. If following the gap list, how many open positions would be appropriate to take? Sometimes I have too many open positions and all start going against me at the same time. I get flustered. How to avoid this? Narrow it down to 2 or 3 open trades or even just one? Well, they shouldn't be going against you once you have initiated and they go profitable. They can stop you out, but once they're going, if you have winning positions, you can keep adding to them, and you can certainly keep opening new positions so long as you're at a profit. Right? So one of the problems that sounds like is minding the flip, right? And protecting that when you have on the flip coming back on you, right? So always mind the flip when you're doing that. And it also helps, like if it was today, something, if you could point out specific examples, like and say, today I was doing this, today I was doing that, stuff like that. Also making sure you're trading reversals. Sometimes that can be a problem if you're not doing that and you're just getting stopped out trading directionally. So I would have to know exactly what was going on there, but more positions the better around when things are really moving, right? And with the gappers, sometimes you got a good long, you got a good short too. But we don't let positions go against us, right? You might get stopped out, but we don't let them go against us, right? Okay. Let's get to don't miss anything here. Okay, next question. On a margin account with 30,000, how would you assign your entry and stop? Would it be too aggressive for a new trader to be looking at a risk-reward setup like this? Well, the thing about it is what you want to do is you want to learn how to add to your winning positions. First of all, when you're starting out, bring your trades to me, right, during the day so I can see what we're looking at. So it says entry size 10%, stop 1% of entry, target 2% of entry. Well, the thing is the target is going to be determined by the magnitude of the setup, right? And that's why we like this. Let's get this here. That's why we like to know what our magnitude is, right? So we don't want to say something's going to go 1% or 2%. We're going to say, well, what's the magnitude, right? So let's say something like Home Depot here, right? We've known about all this kind of stuff. So for swing stuff here, the 2-2 week, if this doesn't reverse on you, it's going to be an outside month, right? So that's going to be a lot bigger magnitude than just saying 1% versus 2% and getting out, right? And just like on a day trade here on the 60, you'll see this. So long as this doesn't reverse against you, these are going to become an outside bar of all that. So it's really more a matter of magnitude, understanding your magnitude, than it is having a percentage target, because we know how far they're going. Okay, I like to trade weekly. So yeah, so then let's say that this had not hit magnitude, even though you still have some things on here, right? And let's say you're in from the weekly, and then you're just minding your 60s. Boom, let them triangulate out. Boom, right here. 2-2 reversal. These become an outside bar of all that. If you start to get afraid of getting chopped up in here, you can take some off, but you're nowhere near getting stopped out down here, right? But let's say that you see this going potential 3, and you're like, okay, I can cut my ad, which lowers my cost for my weekly entry, right? And then wait for it to set up again. Whoop, bam, I'm in again. Thank ye. And then 2-2 reversal out of that, which continues to lower your cost. Or even up into here, if you just wanted to cut a partial and say, okay, well, my cost is down here. So if I just cut half of this, then from here to here, right, moves my average price down. So even when it does this, it's nowhere near stopping that additional add out. Then boom, add again, cut half right here. Now that from here to here, your average cost on that is down here, right? So there's a lot of ways to be able to do that. So sharing the trades exactly what you're doing, right, helps, and knowing your magnitude, if that makes sense. And I'll get to trade in reversals. Aaron, that makes sense? Okay. And okay, next question. I've been watching you for a week now and adjusting to your live scan, and I'm trying to figure out how to best parse the information you are presenting. If you're trying to do that, you're jumping around too much, right? A lot of times I'm just talking about what's going on, trying to figure it out, and that's why sometimes when I'll joke around, I'll be like, if you don't know where you're going, don't do anything, right? A lot of grindy stuff out there, what have you. If I'm looking for day trades opportunities in the 30 and 1 hour, what time should attentive to you, and what do I listen for from you? If I'm looking for a swing idea, from when should I tune in, and what kind of things should I listen for you to say? That would be usually the weekend video and the strat attack is when I give more of the swing ideas. Like today, I did talk about trip 322, right? That's something we look for. It definitely is, right? If you don't have a reversal, it's going down here, right? So trip, talk about Twitter maybe with the rev strat kicking in with the tech starting off strong. What else did I talk about? Futu. Come on, man. Futu. Futu. Inside and down, right? It's continuation, but you have your red month. So if this works, your hopes is take these guys out, right? So, and then here you can go to her 60 and go, oop, inside 60, rev strat, bam, 1, 2, 2, buckle my shoe and puke. Strat attack is in the newsletter section. So go there and subscribe to the strat attack. That comes out about an hour after the close on Tuesday. And the reason I do that is because we want to avoid the reversals of the week. So like today in the video I talked about, they didn't give us too much evidence what they really want to do this week. There's still a lot of inside weeks. And, FAS is down a little bit, trying to take 2 weeks down, but not really getting killed either. So the reason I do it that way is so you can have the weekend video over the weekend, see what we're talking about, what we're looking at. Then let them open on Monday, talk about it here. Then on Tuesday, I can look for things that have gone up or down for 2 straight days, right? That tells me the buyer or seller came in on Monday and then they came back, right? That's something I want to know about, right? They're hanging around. If you're going to be up 5 days in a row, you got to be up 2, right? And so as far as the jumping around during the day, don't worry about that. Have your and strat time during the day, yeah. Yeah, and strat time, by that time, if you've done nothing and don't know what to do, by that time I've pretty much got it figured out what they're doing, right? There's a newsletter section here that you want to, Marketplace, thank you, and you want to go subscribe to all of those. There's a ton of information in there. So you've got the informational newsletter. It's like when people ask me about triangles, I've got 7 hours of drawing triangles in there, right? And the good thing is I did it last July, so you can see how the tries played out too. Follow along, trying them with Rob. Yeah, and so all the power hours are in there. Every strat attack show, every strat time report, every nightly video. We have a link in there for for TrendSpider, if you want to try them for free. We've got my articles on that I wrote for Steve Burns at New Trader U. Definitely want to watch the Benzinga interviews with myself and 7 others. Really good stuff there. Sarah and Jermaine and Dee Dee and Joe and Arturo, Jim, although not everybody's going to trade like Jim. But so go in there and subscribe to all that stuff, and then you have it. So on Tuesdays, it's kind of like a weekly version of the Strat Time report. So when you're starting out, that's why I say if you stay on the 30 and 60 gappers, right? There you go, CP rail. Thanks for playing. Tries to go directional down, hits the magnitude here, and then as soon as it comes back in there, cover. Then here you go, 2-2, bam, right there, 2-2 reversal back down. Full time frame continuity to the downside, 2-2 reversal weak, 2-2 directional coming back to previous range on the day, and then boom, wait for triangle the out, which is this, right? Stop out the tight stops, and then off she goes. And so that was below 360, 344. Not bad, down to 356. All right, we'll take that. Right, Kaz is like, when I stay in the gappers, it's like not everybody's cut out to jump around a lot. Some people can just do that. Other people, what the heck? Yeah, other people just stay on the gaps, and you can make a very good living doing nothing else. So let me go back now. Tony had a question way up there. DMTK. Okay, DMTK. It's got a big range in here. You got a mother bar issue here on the weekly for one, but it is working. It's trying to work. You can see a little choppy in here because of that. All of these days within these 2 days, that's a bit of an issue. All right, you're still right in the month too. You're directional. So you had last week, you had somewhat the reversal, but mother bar issues. It's not totally our drug of choice in here. And here you go. So you don't have the monthly continuity, but you're overriding it with the weekly daily 60. Here's your 60. 2 up, 2 down. Right there. Bam. Thanks for playing. The 3-1-2. That worked. It's got chopped up in here a little bit, but that's all you got to wait for. Then you go to 30. Inside. Down. 2. Boom. That was your 60. That was good. This was 2-2, a little choppy. This is inside and up. 2-1-2. Is nice. Boop. Right back up in there. So, and then here was 1 bar rev strat day on Friday, right? So as soon as it got back through here and went green, you could start looking at those shorter time frames. Looking for an outside bar. Then the 3-2, skidoo, slowly 2-ing her way up here. And so one of the things when you see something grinding like this, you prefer to have that corrective activity down into here. And I'll show you why. It did accelerate here today, but when you have something like this, a grinder like this, that you can see mother bar issues, you really want to try and have signals that are closer to down into here. Because you'll see that it pops up and then comes back in, pops up, comes back in. Now it doesn't fall apart, but if you're going straight into the highs, it's going to stop you out if you have too high of an entry. Does that make sense? Okay, cool. And let's see. Okay. Hold on. Oops, I went back too far. What do you mean by trading reversals? You got to know what reversals are, right? You have to know what the strat signals are. And I'm good with only knowing a few and staying on them, right? The two up in one direction, taking out the high, the two down. Two, 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 two. Two up, two down, or two down, two up. The 2, 1, 2, right? The down, inside up, or the 3 itself. Failed 2 changes continuity, bam. But you got to know that. One can make a good living doing nothing but 2-2 reversals. And also, like I said, the trip, the good thing about 2-2s and 3-2-2s, you don't have to draw the triangle. Because I get that question all the time. How do I draw the tries? You don't have to. It's in, right? This is an outside bar. That is the broadening formation. Here's your lower low. Here's your higher high. Now, if they're willing to sell down and pay up, they might do it again. And if this doesn't reverse, you're going to come down and take this out, right? Magnitude, 2-2 reversal following a 3. Okay, newsletters. Yep, the newsletters won't show them until you subscribe, so you got to subscribe to them for some reason. And Scott, when you call out high or lows of various stocks, should we be looking for reversals or continuations? Oftentimes, I'm just giving you color of what's going on, right? Or I'm reconfirming that what we thought was going to happen is working, right? And then I will say, wait, triangulate out, wait for corrective activity against you, wait for it to set up again. If it's going straight into the highs, you're going to need it to set up again, right? They will. And that, what I mean by that is like a 15, 30, 60 reversal against that new high that then sets up another reversal back up, right? Because that gives you your magnitude, the old 2-2, 2D2. So here in that DMNK, what was that again? Sorry. DMTK. Here's what I mean by that. Triangle the out. Here. This is a reversal against you, right? We want to buy this thing because it was green on the other time frames. So you wait for them to triangle the out. Here. You stop. Tight stop guys are gone right here. Right? There it is. Boom. And then these two are going to be coming outside. You didn't have a lot of magnitude on this, but sometimes they go further than you thought. Right? 2 up, 2 down. Right? So let's say that this was on our list that we were looking to buy. And I said, DMTK goes into the highs. All right, that's true. Then you wait for this. 2 down. Boom. Here's your tight stopper, boys. They're gone. Off she goes. And sorry, ban. When playing the gappers and reversing back into the gap, what is the price target or magnitude? All the way back to pre-gap? Yeah, it depends. It depends too. If you're coming back into an old 3, what's going on the other time frames? But yeah, come all the way back and hopefully go 3 on the day. For a strat novice, do you recommend shares or options? Shares. Shares. Options come in time because there's some more variables in there. And Teslers. Now I'll show you the Tesla. So Tesla, we knew we had a little bit of an issue because of the weekly, right? So if you went to the 60, you would have seen this. This is directional. Some people will take that, right? 2 up, inside on the 60. Goes inside and up. Then you got to mind that flip because you're going directional, right? Outski. Because this popped up, which means this could be a potential 3, which it eventually was. These 3 became an outside bar of that after this 2 failed. Here's your inside 60. Right there. Back down she goes because we're expecting this to be a compound 3. So you hit right here, 689.73. Boom. 19 bucks. Take these guys out. This then became the outside bar of them because that's how price discovery works. Slight higher high, slight lower low. This was directional, but because of the failed 2, There's also the potential compound 3. You can take that. If you go to the 30, 30 a little choppy here, trying to get through there. There you go. Right there. 30, 2, 2. Thanks for playing. This was 2, 2, 2 right there on the 30. Thanks for playing. Directional inside. All right, so there's some good stuff in that Tesslers, even though it's doing, in general, doing nothing. When you say reverses back towards time from continuity, say the monthly, weekly are green, right? 60 goes 2 down, then back up, but the day is big and red. Is that a trade worth taking? The 60 is a major signal, right? And so the big red is a concern, yes. We're not going to be able to change that back, probably. But you can take a 2260 because the 60 is a major signal. Because if it's going to change that day, that's what it would look like, right? Depending on is it getting hit because it's in a sector? Is it getting hit because of the market? Is it getting hit just because it's getting hit? You know, all those other things that are going on. But 60s are a major signal. Well, Tesla was also inside week, so some people would choose not to do that. Or back towards full time from monthly, weekly, daily, all green, 60 is red, 2, then 2. Yep, there's a good one. That's exactly. We definitely look for that. Circling like sharks on those. 60 is the only thing red? Oh, yeah. Then you're minding the flip because all it takes is 1 cent and it's back into full time from continuity. But continuities also, it's also important to understand control. Right? 60 is always in control. It's a matter of how much control it has. Right? In the daily and the 60, you can override the weekly and the monthly because if they're in opposite directions, I can't identify the monthly and the weekly participants. They're gone, as far as I know. But we would still mind the flip on those. Right? Just like in that DMNT, the monthly was red, but everything else is green. They're overriding that. The monthly seller, I can't identify them anymore. Yeah. You can get it. Yeah, you can take shorter signals. It's just, are you skilled enough to do it? Continuity entry. The flip is the bottom of the hour when we get a new 60. It's like a new day to us. You'll see the machines flip on and off, right? Because you have to tell automated trading programs what you want it to do, SPY, Apple, what have you. What do you want it to do, buy or sell? How do you want it to buy or sell? By sitting on the bid or taking the offer, or hitting the bid and or staying on the offer. And when do you want to do it? And you'll see them flip right on and off, man. Trust me. That's one of the biggest revelations people have when they see the power of the flip. Is it good to not trade on a Monday and wait for a Tuesday? I'm good with that. Second hour for the uncoupling, I'm good with that. Because Mondays, like I said today, they were trying to tell us we want to buy tech, which crapped out later. MU stayed inside day. FAS and the financials were 2 down on the week. So, especially in DIX. Now, sometimes we'll have a simultaneous break on a Monday, right? And then we'll trade that. When that happens, yeah, that's not what was going on today at all. Well, we just call the 60 the flip, but we call the 30 the half flip. And yeah, anytime you're going to see a new bar, that's something you want to know about because people's perception is about to change of what they see, right? And what I mean by that is if you have, like, at this point, nobody would say Tesla looks bad, right? It's green, it's on the highs. Nobody would say that looks bad, right? Then, whoa, suddenly, the most beautiful chart looks like the ugliest chart. And that's why breakout guys get killed if they don't get out. It's guys who are like, I buy the breakout. I'm like, you better have a tight stop on that. Because you're walking into potential threes, right? When you do that. Whenever you're buying into new highs of anything, it's potential threes. Right? So yes, any new bar is going to change the perception of what the trader's seeing. That's something we'd want to know about. just call it the half flip. Some people, because some people will keep up both 60s, the 60 on the bottom and the top, keep track of them that way. But the bottom of the hour, what that does is it captures the entire first hour of the day, the opening, as a benchmark. You've got the European equities closing at the bottom of the hour. Crude close at the bottom of the hour. Crude also has its number on Wednesday at the bottom of the hour. So there's a lot of stuff going on at the bottom of the hour. So European closes a potential liquidity event. They're closed. We're open. Come on down. Now, let me get through Pablo. Then I want to make sure everybody's up to speed, because sometimes this thing goes pretty quickly. So if you're trading on a 5 or 15-minute signals, would you treat the new 5 or 15-minute bars as flips? I would, because you're still going to be gauging magnitude. You're just going to be doing it faster, right? And for newer folks too, the higher the level of volatility, the less important some of the longer time frames are as far as continuity. Because when we have volatility, you're going to see hourly charts that are like monthly charts, right? Things that are just exploding and puking and all that kind of stuff. And the great thing about that is when you do get like hourly signals during high periods of volatility, they're very strong. So one frustrating thing for some people trading inside bars, when you do it with low volatility, they're like, it just goes up a little bit and goes, doesn't really do much. So since the inside bar is in equilibrium, the reason we like volatility is when the IV's high, like GameStop IV is high in the options and stuff like that, and you get an inside bar. The analogy I use, it's like spinning a top, right? And it's going a million miles an hour, but it's sitting there and it doesn't look like it's doing anything. But it's spinning around real fast, right? And as soon as you touch that thing, it goes flying off the wall. Same deal. You'll love it. And where's the best area to take a trade in a broadening formation? Off the bottom, long, top, short, in the middle? Preferably, you'd like to get the bottom or the top. And so that comes down to being a matter of when it happens, right? So it's often common mistake is people just seeing the bottom of the tri and just getting in there. I'm like, if you still have continuity to the downside, that thing's going to expand, right? So when that matters, when they hit top or bottom of tri matters, right? On a flip, is it a new week? Is it a new month, right? Ask them GameStopper boys. They apes. Yay month, new month, boo. Look at this, like clockwork. Hello February, pig, right? And then you wait for your reversal. 2 down, 2 up, boom. 2-1-2 continuation, boom. Take out the inside month, but come back into it, cover. The Rev Strat day in the mother bar, 1, 2, bam. If you remember, that thing fell apart hard when that hit. Anyway. So yeah, it's a matter of when things occur with the triangles. And Tesla, yeah. On the 30. Right here. So what you could have done here, right? You could have taken this as a 2-2 reversal right here, right? But it's got to stay down there, right? So you could have gotten something out of it. When it starts popping back up on you and getting close to that, you can just take it. Then you're prepared for the 2-2-2. So just like we have pivot machine gun, 2-2-2 shotgun. Boom! Blow he head off. Really like trading with the color of the day or the color of the week? Sure, I'm good with that. On gappers, what if it fills the entire gap on the first candle? Do we go back to looking for standard reversals like any non-gapper would? And Neo. So Neo right out the chute just, well here, on the 30 did do this. It didn't complete by going 3. So this is a 2-2 here. Bam. So you could have taken that, hoping that it wipes all these guys out. But then you got the new 30 here. And then there's your insider. And then you go 2-1-2 and go back up on the 30. How's that 60, Neo? And then she got mother bar issued. And here was the problem. Couldn't get out of that opening range. What would you cover on GME? And GME is a matter of, who area. Then you can look for stuff like this here. The 2-1-2 pivot machine gun. Didn't get all these guys, but got a good portion of them. So GME, now you got inside month and inside day, and you got the earnings coming out, right? So here, when you can't get out of the mother bar, you got to cover here. You could have tried long here too, and just gotten stopped out. And then letter B as she goes inside weaker. And so say on Monday, XY reverses off a 2 up, bottom of weekly chart. Yes, no, you can do that. 2-2 reversal on a Monday, sure, because your magnitude's built right in there. And you got your reversal right out the chute. They might jam them right away. Yep, yes. DraftKings. DraftKings went into conflict, so it did what it was supposed to do right out the chute. Here's your directional inside week to the upside and go take out the high, right? 74.09. 74.38. So it did its job like right out the chute, and that was it, right? So you could have taken this here, the 3-2-2 back up, right? Because unless you have a reversal against you, you're going to take this out. Didn't do it, but you did have this 3-2-2. Jumped around a little bit, but didn't have the reversal against you until the end of the day here. So there was something in there, but conflict with the day and the week, hit magnitude, exhaustion risk by going into the highs. No reversal on this thing and directional on the month until here. The 32. There was your 3-2 down on the 30 and then 2-2 up. It came right back in. No. Cool. And I was going over the course about simultaneous breaks. I'm not clear on that. Could you show examples? Yes. So simultaneous breaks are happening all the time. And what that means is that either certain setups by time are working, say that the heavy concentration things are taking weekly stuff down, be it 2-1-2, be it 2-2, but there's a higher concentration of that, the higher the probability that things are going to work out. Like that's why today we didn't have that. You had it somewhat in the sectors, like right at the chute SMH, almost everything was going 2 up on the day, right? So that was simultaneous break for the most part in the semis, taking the days. So you go like this, SMH. SMH was a 2-2 reversal day. QQQ was. Here you go Apple. Right, so right out the chute, tech was all 2-2 reversal days, right? Now it wasn't give you the weeklies, which we would prefer, but right out the chute, we know that, right? So then if you go to like last week, there was weekly breaks in the energies, simultaneous break. The reason that this is important is because it tells us where institutions are doing something. And we know that because they're not doing it buying one stock. They're buying everything in the same sector, right? Because they're all going up. That means they're not being discernive of company. That's a good thing, right? They're buying them all and the ETF. So last week, had a simultaneous break I talked about in the strat attack. OIH, 2 up, 2 down. XLE, 2 up, 2 down. XOP, 2 up, 2 down. Conoco, Two up, two down. How's PXD? Nope, that held up. I don't know about EOG, but most of them two up, two down, right? So that's a weekly simultaneous break to the downside in the energies. That tells me we want to be going after some energies, right? Specifically, I was talking about Conoco because it had already broken on Tuesday, right, with OIH and all that kind of stuff. So it can be time, like I said, where the reason I ring the triangle is you have potential simultaneous break, right? You got an inside bar in futures. That's something I'd want to know about, right? Especially if you have a break going on other time frames. So this also clues us into when the big moves hit, right? So here, right, when the pandemic hit, everybody was going outside. Everybody. There's no way you're going to reverse that. When you have 90% plus doing it going 3, you're not reversing that anytime soon. And then last March, 3-2 down, everybody was a 3-2 down. Simultaneous break. There's no way you're not turning that around, right? We knew that. We knew that. If that makes sense. Okay. So that's why you'll also hear me say the flavor. Like inside 60s, the flavor, everything's going inside the 60. So we want to start to see if we get a simultaneous break, or everything is inside the 15 or whatever it is on the flip or wherever it is. That's what I'm trying to point out. I'm looking at the concentration of signals. And then what I'm doing, scanning, is I'm looking to see what do we know to be true about monthlies, and then breaking it down to the weeklies, right? So as soon as we start a new week, how many are breaking to the upside? How many are 2 up? How many are 2 down? How many are failed 2s going 3 up or down? That'll tell me the direction of the market. It has to, right? And if that number's kind of even, we're just going to chop around, right? If that starts to get biased significantly, oh, it's on, right? Then it's on. Yep. And that's when you want to go after like the triples, right? Your 3-timers, right? Get some more juice, because it's very difficult to turn around. Almost never does. Okay, on a gapper with a 2-2 reversal, I'll often move my stop up to break even once the price goes far enough. Then it may stop out. Should I keep jumping back in every time it goes back across the entry price? If that signal's still good, yes. Well, if it's 1-2 candles later, it wouldn't be the same signal. You can take the same signal. Let's say it's a 2-2 reversal, 60 up, stops you out, but re-breaks that 60, you can get right back in. Yep, you can do that. Because one problem people have, will say, they'll look for whatever they're set up in whatever stock it is, and they get stopped out, and they're like, oh, that didn't work, I'll go to another one. If it's still good, it's still good, right? If there's still reasons to be doing this, we call it doing battle. We know you're going to get stopped out because there's always going to be micro tries. It's when you don't and they really gone, right? But if the longer term stuff, evidence is still there, and sometimes we'll say, second mouse gets the cheese. Right? The first guy gets stopped out. The second mouse gets the cheese, because the stop out creates another triangle, right? So now the magnitude's going to be a little bigger, right? Because of how you got stopped out. And that also is one of the reasons why people will, non-stratters anyway, maybe you, at one time would make a little bit of money, make a little bit of money, make a little bit of money, and then get destroyed and give it all back, right? Because you didn't know about price discovery. We know that once it re-breaks, it's re-climbing through the try, and the try is growing. So sometimes even the third try is the best, because now the triangle's grown a little bit more, right? You're trading too tight a try. Let me see that later candle thing. Oh, here, I'll put that up there so you can see it. FATX. So FATX here, okay, was 2-2 and trying to hit the magnitude, didn't do it, right? And here, when it re-breaks that, no, because you're going directional now, because this has already took this up. directional. If you had another signal, you could do it. Yeah, let me see that. Got one, two down. So it was trying to rev strat, just didn't go. So no. Okay, cool. And Naresh, sorry if you answered this already. Do we look for broadening formations on 1 hour charts and 4 hour charts for entries? Oh, all of them, any time frame, every time frame. We want to know where we are in the series, right? And that's why there's exhaustion risk. There's hearing me say back into the try she goes, right? Back into the try and she goes is something you would want to know about, right? So on Friday, I haven't put this in the course, but this was an important reversal here, right? It was a simultaneous break for one, right, on Friday. That's why everybody's like, oh. But here, this was a 3 with about 70% green into the highest exhaustion risk, right? So what that did off of Fed day, it stopped everybody out, right? Everybody's short, they're gone, right? Anybody long could stay long because, yay, Fed, low rates. But then the next day when this took this out, boom. Everybody's going down here, and the magnitude, because he took out the high, was to come down and take this out, which we did, right? And then Friday gaps down, now trying to come back up. So this try here is what we're watching here. How do you get out of here? You're going to take this out, these guys, or are you going to go back to the highs? Right? Are you going to climb this wall? What are you going to do? So we don't have that much evidence here to check it out, and that's why I pulled back a little bit on the vid, saying we got some stuff. There you go. You built the triangle. You might as well enjoy it. Exactly. SVXY. SVXY is sexy, and UVXY is ugly. Sexy and ugly. If you go to the informational newsletter, there's a lot of stuff in there. In the course, I'm continually building. I was going to do a bunch this weekend, but I got slammed in emails and stuff. I was here 4 hours just answering texts and emails and DMs on Sunday. 4 hours. You don't want to be me. Essentially what I'm doing is the course will help build itself over time because I can explain conditions as they are actually happening. And then that helps, in the future going back and be like, no, he talked about that there. And remember we talked about that? It's happening here now, right? And does a large gap like ODT mean we start our broadening formation over and negate the previous? Probably. That thing's toast. That thing's toast. So here it was. Triangle they out. Boom! 2-2 back down here on the monthly. Below 1951. But I believe that was a gapper. No, I'd already broken it, but stuck inside here, so. And here you go. And triangle day out, exhaustion risk. Look at this. Ooh, yeah. Yeah, boy. The 2-1-2. She already knows how to puke. And at that point, check these guys. Boom! Boom, boom. Out go the lights. Because I'm not kidding. I'm ready to fight. Been looking for my baby all night. If I get that try in my sight, baby. Boom, boom. Out go the lights. And that's why, to make it even easier, if you just stay in the 60s, a 2-bar RevStrat 60 takes 3 hours to set up, right? That's a good thing. Sleeping late, all that kind of stuff. And yeah, I can't stress enough for new folks to get through as much material as you can. Because the newsletter section has so much in there. Especially, like people said, I can't see your cursor. Can you see it now, man? I don't know how to draw triangles. Here's 7 hours of it. What? Because in that, the epic poem, Drawing Triangles, another thing I'm pointing out is the compounds, saying here's what you're not seeing, right? Because it's not always going to be an outside bar. It's going to be a compound, right? Like the Home Depot, right? Also, things are going to be compound one, right? Stalk in a range, where the problem with people trying to read charts is that they're not understanding that they're trying to analyze data, right? People think that this is geometry. It's not, right? You're analyzing data. Who's right? Who's wrong? Who's doing what? Who goes underwater where, right? All that kind of stuff is what we're doing. And so you've heard me, if you're depending on how long you've been here this month, talk about something like this in the Qs. This is a problem, right? This is a problem. 3 months of this, that's a problem. It's a problem, and that's why you're hearing a lot of people maybe on Twitter, complaining and whining and stuff, getting chopped up. I mean, you should be getting chopped up in here. Look at this opening and closing range for the last 3 months. Sucks. And also, I make macro videos, right? And I make that once a month, and that will be coming up on Easter weekend, where we talk about the quarterly and monthly signals, right? That's the big boy charts, right? And due to last year, unfortunately, we don't have as many inside months, years to the upside, right? Because everything got wiped out and was an outside year, right? So potentially we got 3 1 years coming in 2022. That's just how it is. But some people will stay on those because the signal's good all quarter. The signal's good all year, like Ford. Ford went, what was that price? And Jermaine was all over this. So I'm on my other computer here real quick. So if you could compare the overall market to what Ford did when it took out that 2-2 year. Ford took out the 2-2 year. $9.50, trading $12.85. On a percentage basis, you're crushing. All right, there you go. On a percentage basis, you're just crushing the averages. All right. So some people have to get all year. So you just wait for a try they out and a little 3-2 stir. Get 3-2 is the one that broke it, right there. There's also 1 bar riff strat monther. We also knew about this try. And if quarterly it's 2 up, can I be long? And in that case, what should be my magnitude for exit? What would the magnitude be in Ford for the year? Magnitude in Ford. Well, it took out last year's highs, so that was your first magnitude. So it made its outside bar, right? I'll try and get this going here for you. And so coming back through the greater try here, you can go back to the highs, man. You're just ripping them because it's just yearly signal, man. Get, boy. Nice try you got drawn there, Rob. Thank you. Boom. Take these guys out, but you still got all this and you got all year left. The first magnitude, though, was to take out last year's high, which it did. Then, 2 years ago, was an outside year. So now you're looking 13 to go that back into that old 3 above 1348. Did it. Did it. So you got those two. So then it just drops back a little bit in the try. But one of the things for newer folks too, for practice, Why? Like on the openings, there's some people who can do the 1 minute, 3 minute, 5 minute openings. I don't expect that most people to do that. But when you watch something that's volatile on those shorter term charts, you'll see all the setups that we do play out, right? Over and 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 over. And there's this 30-minute 2 goes 3, bam, bam, 32, inside, inside, back up, directional, sideways 60 maybe, and you'll see it play out so often that when you slow it down and you're like, look, check out the monthly and the weekly first, right? Then go down to the 30, 60s and you're fine, right? Because we have a lot of ninjas in here. I know it sounds like and I'm talking about a lot of things because people are trading this every which way. That you can slow it down. You don't have to worry about that. And as I say oftentimes, if you're trading 30s and 60s, you don't even have to look at anything until 10 after the hour or 10 minutes before the top of the hour and see what your 30 60s are setting up. Right? Is it a Rev Strat 30 that would trigger an inside 60? Is it both inside? Is it closer to being a 2-2 reversal back into time frame continuity? And that way you can nail down your universe real fast. And Rob, please talk about the do part of the create, negate, or do. Okay, so what's that going to do? Would be simply is create, negate, but what's it going to do? It's like okay, so is the next 2 going to cause a compound 3? Is it going to trigger a rev strat on another time frame? What's it going to do to the whole big picture, right? And so sometimes it'll be like, well, is it exhaustion risk? And say, okay, FAS. Here's your weekly. What's the next 2? Here. We're closer to taking it down? Yes. That's going to create the 2-2 reversal with the potential outside weeks. Here. Right? That's what that's what that might do. Right? It creates the 3-2. Right? It negates the 2 up. Right? And potentially outside week. So it's just a matter of what does it do to the big picture. Then, let's say you'd be looking at the monthly and say, okay, is that going to do anything to the month? Probably not. You're still green on the month and you're in the middle of the month. However, if that's going to fail, right, since you technically have 2-month mother bar, maybe it does, maybe it doesn't. If it does work and it starts coming back down through here, then you could set up the shooter month, come back down here, right? That's what that might do if that works, right? So always looking down the road, if something's going to work or fail, what's that going to do to everything else? When is this occurring? Cool. I hear you say avoid inside bars. Should I avoid a signal? Should I avoid a signal on a 15-minute time frame if the 60 is inside? Probably. Yeah. Yeah, it depends on what else is going on in the world. Is it full time frame continuity? Is it you know close enough to a reversal that it would not be? Do you have magnitude on that 15 that tells you that it would not, that if it hits, it's not going to be inside on the 60? That'd do it. You can do that. So a weekly reversal play, say here, 2-2, right? Do you want to take the earliest reversal in the direction of the weekly reversal? You can take it as soon as it breaks the week, right? As soon as it goes 2. You don't even have to wait for 15.5. It breaks the week, you could go after it and hit it. Because that's where everybody from last week goes underwater, right there. Right, that might be it. So here, the good part about that, look here, is that you can go here, say the low was 88.92, right? It opened here and broke it, right there, right? Now it popped up a little bit in here. You can take the rebreak. You can just keep using that weekly break, right? A little messy up in here, but you can do that. Oh, play 60 reversal in a direction that will cause it. Oh, yes. Yes, yes, indeed. Oh, yeah. That's how we use participation groups against each other. Right? It's like a house of cards. If this, what was that create negator do? If this 60 works, that's going down there. And if it goes down there, that's where everybody goes underwater. Bam! Ah! So I like to say with the 2-2 reversals, it's like a porch collapsing. Everybody goes down at the same shot. Right? And when it works, it really works. And I was explaining this over the weekend, and I thought this would be a good example too for some people. You're going to get stopped out. We know that's going to happen, but I kind of like this weekly Apple as an example. Okay, so here, if you're just trading Apple, which in general is doji doing nothing, but recently, you'll see here. Here's a rev strat, 1, 2, 2 on the week, right? So if you're swing trading, you just let it play out. And you just keep your stop there and let it play out. And you're like, okay, that's good. Then the next week, if it doesn't come all the way and stop you out, you can just move up on the bottom of the week. 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 Right? And then when it stops you out, you can get short. Right? And it goes down, then goes inside. Now you got a problem. Then it goes inside back up. 2, 1, 2. Boom. Out. Long. Right? Then you see exhaustion risk, potential 3, outski. Then you see this, inside weak, directional to the upside. You could have taken that and then just get stopped out. And then boom, rev strat weaker. Still good. Still good, still good, still good. 2-2 against you, long, reverse and get long, get stopped out, so be it. Right? It's the ones that don't stop you out. Right? Yeah, you can just let it play out. My weekly's good because there's going to be micro tries that'll drive you nuts, right? And so I like to slow it down for more passive people because the better you get, the more you can do, right? A lot of people don't want to do anything and be like, dude, just give me a winning position. I'm like, there you go. If it's above that all week, you're good. The strat right on the options chart instead of the underlying assets? Sure. I'm good with that. Because what you'll see oftentimes when you do that, you're going to see the magnitude hit with a gamma spike, and then you're going to see it back into the try or stall out with theta burn. That's what you'll see with those charts. All right, well, we're coming up on an hour here. I like to keep it around an hour. So, when people are watching it in the future, before I had a course, we used to do this 3 or 4 hours every Thursday. But now that we are building that course, and like I said, that's a perpetual build, right? I'm constantly be putting more stuff in there. And welcome new folks. Once again, make sure you go subscribe to all the newsletters. It's free. There's a ton of information in there that answers a lot of these questions for you. And especially if you haven't read the New Trader U articles. They're short, they're to the point. I talk about algorithmic activity, I talk about macro time frame continuity in there, and all that kind of stuff. So, all right. Well, thanks for coming out, everybody. All right. I'm Rob Smith, this is Black Channel here. Chicken Chatter, power.